What's up, guys, and welcome back to the channel. In today's video, I'm going to be comparing SCHD and BST to see which dividend ETF is the best for passive income. And as you can see, my portfolio is currently valued at $50,271.15, and my market gain for the year is $129.82, and I've earned $271.52 in dividends for a total market return year to date of 0.81%. So it's not looking pretty good when compared to the S&P 500. Now, if we go to my activity feed, you can see in the past week, I've earned dividends from Colgate, $3.57, Texas Instruments, $9.09, Abbott Laboratories, 72 cents, Hormel, $5.66, Procter & Gamble, $5.82, Realty Income Corp, $9.32, Stag, $6.98, AbbVie, $17.23, Apple, $1.40, and then looks like I had two buys of Waste Management and Avgo, and then $2.42 from Costco. And now let's get into the topic of this video. If I go over to Seeking Alpha, you can see SCHD, the Schwab Strategic Trust, Schwab US Dividend Equity ETF, currently trading at $76.91. And in the last year, it's down 0.47%. However, year to date, it is up 1.95%. And we can see that we have an expense ratio of 0.06%, which is pretty good. A dividend frequency of quarterly, a yield of 3.33%, and then assets under management, 47.8 billion. And if we go to the dividend tab, if it loads, you can see once again that yield 3.33%, the annual payout of $2.56, and an incredible 5-year growth rate of 13.74%, and then a dividend growth of 10 years. And then let's go to the fact sheet. Always love looking at that. You can see the objective of SCHD is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. And it's a straightforward, low-cost fund offering potential tax efficiency, and the fund can serve as part of the core or complement in a diversified portfolio. If you saw my last video, you will see that SCHD is now the core of my portfolio. Then it tracks the index, and it invests in stocks selected for fundamental strength relative to their peers based on financial ratios. Now, if we go down here, what I want to show you is the total holdings in SCHD is 103. And then let's go to their top 10 as of 2/17/2023. So they have Avgo, which is a great stock, Verizon, Cisco, Texas Instruments, Home Depot, Merck, Lockheed Martin, PepsiCo, BlackRock, and then Coca-Cola. Then if we look at their sectors, you can see tech is at the top with 21%, then financials at 20%, consumer staples at 14%, and then we have healthcare, industrials, consumer discretionary, consumer services, energy, materials, and then utilities. And then now that is SCHD. Let's get into BlackRock. So we have BST, the BlackRock Science and Technology Trust, currently trading at $32.06. And in the last year, it is down 25.51%. However, if we switch over to the year to date, it's actually gaining 12.41%. And now this right here says their expense ratio is 0.88%. It's actually 1%, which is pretty high. And they do have a dividend, a monthly dividend, and assets under management of 1 billion. So let's go to their dividend tab. They have a dividend yield of 9.36%, an annual payout of $3 or 25 cents every single month, and impressive growth rate, 5-year growth rate, 17.49%, and 6 years of growth. So now let's look at their fact sheet. And what I want to scroll down to, so this is a lot. Basically, their investment approach is their perpetual closed-end equity fund. They combine current income with current gains and long-term capital appreciation. Under normal conditions, they invest 80% of their total assets in equity securities issued by the U.S. and non-U.S. science and technology companies in any market capitalization range. And they're just selected for rapid and sustainable growth potential from development, advancement, and use of science and or technology. And then as part of the fund strategy, they intend to employ a strategy of writing or selling covered call options on a portion of the common stocks in its portfolio, and they write the call options to reduce the fund's volatility. So let's scroll down to the key facts. And what I want to point out here is the number of holdings. They have 567, which is over 5 times SCHD, and it is quite a bit of diversity. Then I want to scroll down and show you guys their top holdings. And these are a lot of companies that you're going to recognize, like Apple, Microsoft, MasterCard, Visa, ASML Holding, NVIDIA, Project Debussy, Cadence, Project Shopping Series, and then Project Picasso. And then I'm going to show you guys their breakdown. They actually have 79.35% of the fund in the United States. And then they have China, Netherlands, France, United Kingdom, Cayman Islands, and so on. Then if we go by sector, software and services is 46%. Then you have semiconductors at 21.5. Then you have tech hardware and equipment, media, retailing, consumer services, diversified financials, autos and components, food and staples, retailing, and then transportation. And then next up, we're going to do the back test, which is always a fun part. We're going to do $10,000, reinvest the dividends, display income, and we're doing SCHD, BST, and QQQ. Now, normally I would do the S&P 500. However, BST tracks the QQQ pretty well. So, and the QQQ usually grows at a really high rate. So I want to see how BST and SCHD compare to the QQQ. So when I analyze the portfolios, scroll down, you can see that we start in 2015 and we end in January of 2023. And when you have an initial balance of $10,000, SCHD performed the worst at $24,891. BST performed the best at $33,778. And then QQQ actually was beat by BST with $30,447. And then if we look at the best year, BST was up 69.09%, followed by the QQQ at 48.4%. And then SCHD was the worst at 29.87%. And that's pretty crazy because 29.87% is an amazing return for 1 year. And now if we look at the worst year, BST had the worst year at negative 38.29%, followed by the QQQ at negative 32.58%. And then SCHD, their worst year was only 5.56%. And then now portfolio growth, that's not the full picture. I love looking at the dividend income. So let's scroll down to that. And you can see in 2015, SCHD brought in $291. BST was at the top with $704, followed by QQQ, which was the lowest at $107. And now looking at this chart, you can see that BST obviously outpaces SCHD and the QQQ. And then we noticed that in 2019, the dividend income shoots up a lot, and then it drops, and then it shoots up again in 2021, and then it drops again in 2022. Now, normally, I would say this is a major red flag because it just shows that their income is volatile and that maybe they're decreasing their dividend or cutting it. However, I want to give context to why it grew It shot up so much in 2019 and then dropped back down and then shot up in 2021. So going back to Seeking Alpha, we are on the dividend history page. And as you can see, in 2019, they were paying out 15 cents on their dividend. And then at the end of the year, they gave a special dividend of $1.69. And then if we look in 2020, which was during the pandemic, there was a lot of uncertainty. However, they increased their dividend from 15 cents to 17, and then throughout the year they increased it to 19 cents. However, in 2020 there was no special dividend, so that's why when we go back to the back test, they had lower income. Now coming back here, you can see in 21 they increased the dividend from 19 cents to 23 cents, and then up to 25 cents. And then they gave a special dividend in the amount of $1.56. And if you remember 2021, that was a great year with stimulus. So there was a lot of money in the market and in consumers' pockets. So that's why when we look at the back test, you can see their dividend income shot up again. However, in 2022, they paid 25 cents every month, and they kept that up for the entire year. So looking at the back test one last time, if you look at 2022, BST paid out the $2,889. And if they don't increase their dividend in 2023, or if they don't give a special dividend, you're going to be looking at about that number for 2022. However, I do want to point out one more thing. So SCHD had $291 in 2015. And in 2020, they ended at $809. So it's almost 2.5 dividend growth, which is great. And BST in 2015 gave $704 in dividends. Then in 2022, it was $2,889, or their dividend grew by 4 times, which is amazing. However, I don't know if that is going to be the situation going forward. I think BST will at least pay 25 cents every single month until market conditions improve, which could be a few years. So guys, thank you for watching this video.